Thank you so much for making the time today. I know that's been a really busy week. And what a beautiful place to be, because we are now with your Arias behind us and your showroom. Let me start by asking you about your restructuring plans, because it's yet another from a few in the past few years. What makes you think that this time could be different?
Right. Well, thank you, and thank you for coming. First of all, let me explain to you why we're doing this. Yeah, this is not something recent. The problem that Nissan has, unfortunately, is a bit fundamental, and it's a problem that started probably around 2015 or 2016. Back then, management thought Nissan could get to a total size of sales of around 8 million cars. Yeah, and in consequence, there were heavy investments made, both in manufacturing capacity as well as in human resource. And unfortunately, the maximum level we achieved was around 5.7 million. Yeah, and nobody ever before thought about really resetting. Yeah, and this is what we're doing. The moment I came into office as a CEO, I did a very deep assessment of the situation, understood the balance of our sales capacity and revenue capacity versus the total structure of a company, and discovered that this is not sustainable. And that's why at the end of FY24, actually, we made a very deep impairment. This is why the landing of the fiscal year 24 had a bad number in terms of net income, because there were a lot of impairments done to reset and resize the assets that we had. And then we worked very actively on the plan that we announced earlier in the week. It's a plan that is, I believe, very strong, very direct, very simple and easy to understand. And we are all about pushing this plan forward.
So you're closing 7 factories and also cutting 20,000 jobs. At what point can you assess if this is enough?
Yeah, well, we're confident that this is enough because the plan, as I said, is robust. It has a leg on the fixed costs, which is what you were talking about, restructuring our manufacturing footprint and work around our overall size in terms of human resource. But not only, it has another very strong leg on the variable cost front. Yeah, on the variable cost front, we also have around 250 billion yen of costs that we will reduce. And we are already working on this. We started a few weeks ago with a team of around 300 experts. And in the few weeks that they started to work, we already have visibility to around 75 billion yen of savings in variable costs. Yeah, and we're accelerating this by putting additional 3,000 dedicated people into this sprint on the variable cost front that will drive a lot of savings. Yeah.
Given the uncertainty and the lack of visibility when it comes to tariffs, of course, how will that impact the overall restructuring effort?
Yeah, well, the manufacturing footprint, the design that we put around is very flexible. So one of the beauties of Nissan is that we are a global company that has a very broad footprint in terms of operations. And taking this into account, the plan that we have laid down has this flexibility to adjust, because for the moment is the US, yeah? But the world is moving, by the second. So now we have this problem in the US, but we may encounter, unfortunately, more headwinds in the future. So the manufacturing footprint strategy that we have laid down allows for this flexibility.
Could that include more cost cuts, including more factories being closed, more job cuts?
The reality is the plan that we have laid down is enough. We are confident of the plan because the plan is clear. We have the right products coming, and also the people that will drive this change. Yeah.
Because as you said earlier, the issues are pretty fundamental, right? I mean, given that even without the tariff risks, already Nissan was struggling. How do you turn that around? Even when some people are saying, is Nissan trying to cost cut its way out of finding new innovative models, new products that can appeal to global consumers?
Yeah, but we're not doing that. What we're doing is resetting the size of a company. Even, what we announced was for FY25, if you remove tariffs, the visibility that we have for the company was to be break-even already. So the trend and the trajectory has changed. Tariffs, of course, are a burden in FY25. We have sized the total impact in the year, which is around 450 billion yen. But already for Q1, our visibility is to mitigate around 30% of that. Yeah, and we have teams actively working on mitigating even more. So we think that we will be, not sure if we will close the whole gap, but we will be much better than what we have announced in terms of overall tariff impact.
But you withheld guidance this time around, right? So can we get a little bit more clarity on perhaps a restructuring cost in the foreseeable future?
Yeah, it's difficult on the guidance side. It's difficult to give a guidance as every other company is having difficulties because of the lack of clarity of what the rules of the game will be in a few weeks. But what we're trying to do is to get this clarity so that we can, as soon as we get the clarity, start making some decisions to move and improve our position even further.
When it comes to the manufacturing footprint, Nissan actually shifted manufacturing of some popular SUVs from the US to Japan in the past decade. Given the tariff uncertainty, could you even consider shifting them back?
Now, actually, today, this is a very, very good position that we have. The fact that, for example, our Nissan Rogue today is produced both in the US, in our Smyrna plant, and also here in Japan, in our Kyushu plant. And this gives us this flexibility that I was referring about earlier. We can pivot and change the mix of production depending on the Forex exchange. If the tariffs in some of the trims are hitting us harder because of the supply chain and how the vehicle is composed, we have this flexibility to shift the production, and it's something that is helping us a lot today to deal with the tariffs.
How does Mexico play into this? Because we know that, of course, there are no tariffs where USMCA is in place, but at the same time, USMCA is going to go into review next year.
Right. Well, but this is what we need clarity on. So we need quick clarity from the US government to understand what will be the rules in the long term. We have already worked in scenarios that allow us to pivot and move depending on what the final rules of the game will be. And we need to ensure competitiveness for our product lines, in the United States.
Let's talk a little bit about those product lines, because even in the US, before the tariff threats, it was pretty challenging appealing to US consumers, especially when it comes to perhaps key products like EVs and hybrids. How will you make this more competitive in the global stage?
Well, one thing that we have to recognize is that the product lineup in the US is being refreshed dramatically. We launched a lot of products in the last few months, starting with the QX80 of Infiniti. We have launched an all-new Murano, we launched an all-new Kicks, we have launched a new Armada, and more product is coming. And we are capitalizing on another dramatic change that we did in the way we develop cars. We have shortened the development process to 30 months. And through this, we are able of accelerating the introduction of hybrid vehicle lines into the US. We will have a plug-in hybrid derivative hitting the market this year. And we will have the all-new Rogue with our new third-generation e-Power coming in 2026. So with this, we're confident that the product will drive the performance.
What do you expect to see from the Japan-US trade negotiations? There's everything right now being floated around, including Japan. US-made Japanese cars being imported back into Japan is one of those things that's being talked about. What sort of items do you need to see in the final deal that would be really good for your company?
Well, there's two fundamental things that I would love to see. One is, of course, fair tariffs. I understand the context of the U.S. administration and what they are looking to do. At the same time, we live in a global, in a global environment where the sourcing of parts is not really possible to do 100% of the sourcing of a vehicle. It has, more than 3,500 parts. To do 100% of the sourcing in the U.S. today is impossible. You just don't have the supply chain available. So we need to have rules that are a bit more realistic, and also rules that are a bit more stable. So these are the two things that we need as a manufacturer in order to start making some decisions, and decisions that align with what the U.S. administration wants, but also that align with the priorities of our company.
When it comes to car parts, how exposed is Nissan? How exposed is Nissan when it comes to car parts and potential tariff risk?
Yeah, well, as every manufacturer, we are exposed, but the good thing is we have a lot of vehicle lines that are produced in the US, and we are working very closely with our suppliers to accelerate more resourcing of parts. But again, I come back to the point of needing clarity, because it's very difficult to invest or to make decisions on investment without clarity on what the rules may be. They're changing every other week, so it's a bit complicated for us.
And you've talked about really these partnerships globally, right? Whether it's in the form of capital discussions or projects. Are full-blown mergers on the table still?
Yeah, well, today we are focusing on our plan, on bringing Nissan back to where it needs to be in terms of sustainability.
But in order to get there, you need help.
Not necessarily. We have very ample liquidity today. We have 2.2 trillion yen in the bank, cash, net cash today. Plus uncommitted credit lines for another much more. We get total liquidity can run up to 3.5 trillion. So we have a solid footing in terms of liquidity today. Now, this doesn't mean we don't need to move and protect free cash flow and protect capex and make some smart choices. But I don't want to become a hostage of our current situation in order to make a decision on partnerships. Partnerships for us are twofold. On one side, you have short-term partnerships which are focused on projects, which is what we're working on with our partners, like Mitsubishi, like Renault, Honda as well. And we have on the other side the strategic review process, which we are running as we speak as well. And on this one, we are talking to many different companies, many different type of companies, starting also from, of course, traditional OEMs, but not only. We're also considering technology companies. We're looking at many things. And the premises that we are trying to achieve are synergies on the bigger markets that we operate. You can easily imagine Japan, the US, we have big operations there of manufacturing, of engineering. This is one of the key strategic views that we want to focus on. The second one is technology for the future. Yeah? Nissan has a lot of strengths to offer as well. We have very good autonomous drive technology. We're one of the best. We have also very good technology in terms of software-driven vehicles and e-architecture. And this is something that we could bring to the table.
When it comes to Dongfeng Nissan, for example, is that the idea of more innovative cars in the Chinese market and be able to eventually export it? Because that's what you said in your earnings call, but at the same time you're thinking you have these tariff risks. Why would you want to export from China?
Right. So for China, what we're doing is twofold. One is focusing on making cars with our partner Dongfeng Nissan. And these are cars that are co-owned because the JV that we established there, we have Dongfeng Nissan Technical Center, which we have shared a lot of technology. So we're working on developing new energy vehicles for the China market, but not only, we are looking at exporting these models as well outside of China. And the current, the way the market is reacting to the first two cars that we have designed together with them is very good. The Nissan N7 and the Frontier Pro PHEV are doing very well.
Which markets are you thinking of exporting to?
Yeah, there are several markets, but you can easily imagine. Of course, the US is complicated because of a current geopolitical situation, but there's many markets around the world where we're thinking of bringing some of these products to.
When it comes to the capital structure of Nissan right now, and you mentioned how liquidity is still solid, what about investments coming from the likes of Hon Hai, which have been floated?
Yeah, well, we're open. And as I said, at the moment, we don't need capital investment. We have enough capital in the bank, and we are focusing on building the right footing for the company. So we're focusing 100% on the deployment of the plan, a plan that is credible, that is robust. We have the right people, we have the right content in the plan, we have the right product to support us as well.
Your liabilities will rise to over $5.5 billion by next year. So despite right now where you stand in terms of the capital position of Nissan, you're not necessarily looking at a full-blown merger at this point.
Yeah, we're considering, as I said, the strategy today is to focus on the short-term improvement of the company. Again, the point is not to do a partnership because we need to be partnered with somebody because of a cash position. The cash that we have on hand is enough to go for the next 12, 18 months without doing anything.
So you're now having discussions with Hon Hai?
We are open to discuss with many partners, as I said, but we're on a different angle, on a different view, not because of a cash necessity, but because of what we want to do in the future, partnering to find synergies and to find the good technology that brings corporate value for Nissan.
You talk about good technology. We've heard that potentially you were looking at tech companies based in the US that could potentially be new partners.
Yeah, I don't know where you heard that one from, but no, we are not talking at the moment with anybody in the US on that front.
Okay, so do you have a view if you have a future partnership of what type of company it should be, a car maker, tech company?
As I said, we are looking at different partners. We have traditional OEMs, we have technology companies, and we have also some China. China companies are also very interesting. So we're looking at everything today, but there's nothing concrete I can tell you about that today.
When it comes to sales inside China, for example, your forecast in your latest earnings call was for a fall of 18% or so. Does that mean that you will have to adjust operations, shut down factories if need be?
Yeah, what we're doing today, we have adjusted operationally the capacity in China to run at around 1 million. And we don't see the necessity at the moment to cut more. We are, as announced in the Shanghai Auto Show, we're investing in new cars. that, again, as mentioned before, they are going to be focused in China, but the additional leg of this plan is to have exporting these models outside of China. With that, we balance the risk of a very competitive Chinese market, and we bring the strengths that we have today in terms of cost, in terms of speed and innovation and technology outside of China to some selected markets.
What's the time frame of exporting?
As soon as we can.
Oh, within the year?
Yeah, we will do that very quickly.
Oh, wow. Have you decided when you say global markets to where you're thinking of?
There are several markets we are considering today. No detail to give, but
okay.
we're looking at this in a very strategic way. Yeah.
What are the metrics when you talk about strategic?
Well, there's several things. On one end is vehicles that complement our portfolio in these markets. We are focusing our development efforts inside Nissan on the B and C segments, which is where we are the strongest. We are also looking to focus our research on frame-based vehicles because this is also a strength of Nissan. And the focus is particularly US, Japan, Mexico markets. This is where Nissan is focusing our own resources for product development. And then there's the utilization of China will be in some other markets in a very strategic, select way in order to complement the offer.
And would you consider also doing more in India instead of just your partner Renault?
Well, one of the parts of the plan, now that you mentioned India, is Nissan has a very big R&D footprint today. And one of the objectives that we have given ourselves is to reduce the cost of engineering hourly average cost by around 20%. And what we will do is to utilize all the different centers that we have around the world to find the most competent and most cost-efficient centers in order to drive an improvement. Yeah.
And I'm being told that we're out of time, but just before I let you go, anything that you have as a message for investors? You're a new CEO that just came in April. If you'd like to tell our viewers what your vision is and what else do you plan to do to really move Nissan forward, please do so.
Yeah, thank you. Well, I think the plan is solid. It's a solid plan. We spent a good time assessing the situation of a company, and we are very decisive. We have already shown immediate actions like the impairment that was made, some additional decisions that we took in terms of not investing on certain things that were already scheduled because the situation of a company demanded so. It's a plan that is very solid, very clear. It's a plan that is rooted in our capability. We have the right people to do it. We have the right resources to do it. And we are determined to drive it forward.